see who joins.
Hey everyone, how are you guys doing? Welcome to TikTok Live. This is Greg Klanjan from Choice Financial Mortgages. We're happy to help you if you have any questions. Just comment below. I'm happy to answer them here live to you. In the meantime, I'm just gonna continue my work and interrupt me. Feel free.
And then we'll just read it from here, the comments,
Yeah.
once they come in. It'll take a second.
Yeah.
Can you see?
I see a bunch of you guys joining. Appreciate it.
Ask me any questions.
Yeah. If you're just joining, I'm just here working from Choice Financial Mortgages. Ask me any questions you might have concerning the Canadian market. Anything I can answer, I'm happy to give you my opinion, my 2 cents on it.
Join.
Welcome everyone.
How's your day going, guys? How's that?
Yeah. How's your day going, guys? Hope you're enjoying this beautiful weather we're having today and getting ready for the weekend.
Let's see. 1 second. Okay, so let's go for the first question. What's
Um, yeah, so there's a lot of things the other thing I would guess is change jobs right in the middle of the process. That's and because banks are looking for stability, so you will have the probation period. So exactly whether it's better to avoid it if possible. The mistake will credit cards. That's going to be score. Credit score. Score. Credit. People think credit. It, if you have, let's say, 49, there's in the demand line verified for the so I will mention variables for portray say different amount to have you portray just you just car new car you are and if I, especially if there's a big time with closing the close, sometimes will you have another car you can see an issue. So that's an you're ready you're not before that quality. So make sure your go as smooth as
What's credit score do you really need to buy a home?
credit scores. Yeah, very good question. It's not a perfect science. There's no exact number, but usually 650 and above is where you should be, and that's the lowest. And that's the only time you should worry about credit pulls, because if you're at the limit, if your credit score is like 650, 660, and the last thing you want to do is go to different multiple banks and branches and everybody's checking your credit, because that's going to drop your score. So you're on the edge. You should make sure, especially I would recommend work with a mortgage broker, because with the same credit pull we can go as many different banks as we want with the same credit pull. So it's not going to trigger multiples. So 650 will be the minimum, I would say. But the lenders also look at the reason the credit score is low, and that's going to make a big difference. If it's simply high credit utilization or recent credit check, it's one thing. But if you're low because you have missed payments, 60 days late, 90 days late, or previous collection stuff, that could be a deal breaker, even though you qualified the minimum score per se. For those of you who are like 750 and above, there is no need to panic. People often think, don't pull my credit. It doesn't matter. So even if your score drops from 750 to 720, let's say, you're way above the minimum needed to get a mortgage. And as I said, as you use your credit cards the next month and the one after and whatever, your credit score comes back up wherever it is. Yeah. And a lot of people don't know this, but as long as you're pulling credits for the same reason, so let's say it's for mortgage reasons. So mortgage reasons is one thing, credit card is one thing, credit line is another. So if you put just for mortgage reasons, within a 45-day window, it counts as one credit pull. Okay, so if I pull one and for whatever reason we have to pull another one in a week, it's not going to impact you twice on your scoring. You might see your credit and see, but your credit, it really changed a little bit. That's not because of the credit pull we did. That's maybe your credit card balances change, and that's meant your score change a little bit, but not because of the credit pull. So you have a 45-day credit pull window that will not, if it's pulled for the same reason, it will not impact your credit score negatively.
Okay.
Yes, it's more that we can definitely doing it. First, let's say first time buyer, which you like your down payment, sure your mortgage program where program make will you yes and we'll go back to the there be so business that I'm gonna even get to numbers that next step to that. No, but self-employed is much more on insurance 20% more. they will work bank financials for your business from online banking. They say, oh, invoice is getting paid for, and that number to estimate your gross. So it they're when they more when they're selling that is usually have the 2% more and personal income going up because the business fluctuates. We understand that, and it gives much options than just the regular banks offer. If you have an established incorporation and you have your business financials and yourself, you're paying yourself 100, so a lot of retained earnings in the company. There are some banks will consider income, so it really improves your borrowing capacity. Just to give you yourself 100K doesn't have for income or income, but you're living on average 100,000 net income. So there are lenders who will take the 100K you paid yourself plus the 300K in net income that it's in the company, you never took it out. So now you have 400,000 income to qualify. So that will qualify you probably for a $2 million mortgage and more, versus the 100K would have probably qualified you only for 500K. So that makes a big difference in your borrowing capacity. Now again, this program only if you are putting 20% down and more.
Okay. So what happens if the
yeah, most banks, it's a common thing. Most banks will honor that. So if the rate drops after we got mortgage approval, we'll go back to the bank. We'll tell them, hey guys, your rate dropped. We want to reprice this, and we'll get the lower rate. The other way around, if the rates goes up, we lock you in. That's the whole purpose of locking in. So I would encourage you in today's environment, even if you're not considering necessarily a change, but if you want to lock in your rate, make sure you reach out to us. Let's get you an approval. Let's lock your rate. You never know in today's environment where the rates are going, up or down. We have no idea, to be honest. Geopolitically is very unstable, so we'll see what the outcome is going to be and what the Bank of Canada, what positions they're going to take.
Okay. Can you use gifted money for a down payment?
Yeah, and it does happen all the time actually. In today's market, especially first-time home buyers, kids, they want to buy their first-time home. Parents always helping with gift. The banks do accept that. It's not an issue. As long as, again, we will have to justify the source. The banks want to verify every aspect of the down payment. So it is definitely doable.
Okay. Any questions in the chat?
Any questions, guys?
One person. If not, let's move on to the next questions. Sure. Should you break your mortgage early to refinance?
Well, it really depends what if we're going to save you money or not. So it comes down to that. We actually have an in-house calculator. If you ever want to find out the real answer for it, feel free to reach out to me. So we'll take basically your information, current mortgage balance, when is it maturing, your current rate. It calculates the penalty it's going to cost you to break your mortgage. And based on that, it's a simple math. We're gonna see, based on the new rates you're getting, how much money you're gonna save for the remaining term, right? So if your penalty is $10,000 to break it, and I'm able to break it, and I'm able to get you a mortgage, and that's gonna save you the remaining $5, it's gonna to the saving an extra 2-3 years term. So it's absolutely, I would encourage you at least check your options before you decide you want to do it or not. Check your options. If it's saving, absolutely.
Okay. How long does the mortgage approval process
how we operate. So basically, you get an application link and set up documents. If you documents back by next day, we can immediately endorse and expect an approval within 48 hours, 75 hours. But if you weeks to get documents, we were just waiting and sitting. But of everything, I would strongly recommend a 30-day before closing mortgage, because mortgage, by the time you complete the application, we submit the letter, reviews it. It's always end more questions. We go back and forth a few times. You gotta get signs. You might need an appraisal. So appraisal takes them, they the report back, they review that, and once everything's done, has final, and the lawyer to do their work. So all this, I would take a minimum 30-day for purchase or finance is safe. A little bit more, I would recommend.
What are the lenders looking for in bank?
Yeah, the first one, income, your paycheck, let's say, being deposited there, and if it kind of makes sense, it matches your employment and pay stubs, right? If you're someone who gets paid same amount every bi-weekly, that's great. That's great. Nothing there to be a but if you even bi-weekly pays are fluctuating, right? Then they're gonna question my is it a drink, we're traveling and or something, we can if there's a commission component or a bonus component, obviously you can justify. And they will look for any money coming to your account, substantial, larger amount, especially over $10,000 that came to your account that they don't know the source. Let's say deposit at a branch, $10,000. They're gonna question where that money came from. Obviously, if it's a gift, this is what I meant like before. Let's keep track of the source, where it came from. We can justify it. We can show them where it came from a family member. We can make a gift letter. That's the case. They're gonna need that. Yeah. Other than that, that's all. Yeah.
Can you get approved if you recently changed jobs?
Yes, but it will be, if you still have a probation period, then we gonna escalate it for an exception. Again, if you took a new job exactly in the same field and there is no probation period, you're good. You have nothing to worry about. Most lenders, at least. Some lenders are more picky. They say, oh, the client has to be in the same job, minimum 3 months, 6 months, whatever. Some lenders, they don't care. But if you change and you have a probation period, we have to apply for an exception. If you change industries, that's going to be very tough. So if you're working as a registered nurse and then next day you are electrician, it's hard to justify. But if it's the same field, will be much easier.
Should you pay off your debt before buying a home?
If you can,
yeah,
pay
ideally,
pay off your debts before, if you can. A lot of people will have that money saved up for down payment. But sometimes we could be very creative in terms of, let's suppose you have $100K down payment, right? And also you have a bunch of credit cards that you're leaving it there because you want to save your $100K down payment. We can look at the situation and we can say, you know what, you don't need $100K for down payment. The minimum required in your situation might be, let's say, only $60,000. So how about we put $60,000 down and we take that extra $40,000 and pay off your credit or small car loan, let's say you have, because paying those off is going to increase your borrowing capacity substantially and improve your credit score. So we might judge that pay off the debts, pay off the car, and this way allows us to get you a higher mortgage amount. And in most cases, it's not a bad idea to pay off a credit card which you're paying substantially higher rate. and take a mortgage at a much lower rate. So that's already recommended in itself. Yeah, I would say pay off. We can pay it off if it makes sense.
Any questions in the chat? Thanks for joining.
Yeah, thanks for joining, everyone.
All right, here's another question until somebody has a question in the chat. What's the difference between getting pre-qualified and pre-approved?
Yeah, it's very, it's almost like I don't want to get into it a lot, but usually in the process, a proper pre-approval is what you need. A proper approval is you want to buy a property, you can make okay. So approval will be all the documents that you're. So normal application, we will send you you fill it up, you send us the document up front. There are vendors which give you every document up front, and that's what we want, because we don't have a support at the end and they say they have verified documents in, and then it doesn't work. So submit vendor every single document. So say we'll go back and tell us number. The only thing that people is the address of the property buying. So, there shouldn't be any reason for your mortgage to decline. If it declines because the property is in the listing of the property, inspection report, and find out, let's say, the structure issues. It's a property you don't want to buy it yourself anyways. If you really want it, we look at other maybe development, give you extra money to make some improvement on the property, because that is, it might not be financeable, right? Let's say there's a roof issue, wheels has to change. So the lender care about the state of the property for financing it. They want to make sure it's in good standing. A pre-approval is very important. First, you want to know. Second, when you make offers, the seller, if she's on paper, they will take you much more seriously, right? If there's any competing offers and the other bid they approval attached to their offer, then the chances are they're going to take your offer. Then the chances are they're going to take your offer more seriously. Your offer might be even a little bit lower, but your approval letters. And what I love about your budget, properties within your price, because the last thing you want to do is visit properties, let's say 6 that's not enough. Now you have your 5 range, and guess what? You property again, because now you're always visiting bigger ones than other ones. So always know your budget in advance before you start the search, and start visiting properties within that property.
Okay. Let's see what else is here. Let's wrap this last question up. What hidden costs surprise buyers the most?
Hidden cost. I wouldn't say as much hidden, but it's not properly disclosed. So these are the things you should be aware of. Everybody knows about their down payment, which is great. Now, when you go buy a property at the lawyer's office, there could be let's say before the lawyer's office, you might have an appraisal cost, which is minimal. Sometimes it's paid by the bank, sometimes it's not. It could be anywhere, let's say, between $300 to $500 appraisal cost. If any issues with the property, you as a buyer, you might want to do an inspection of the property. There are inspectors, they do that. They verify every aspect of the property. So that probably might cost you anywhere between $500 to $1,000.